Dave, we got NAHB data out this morning. It missed expectations. Is that at all significant in February?
No, I don't think so, Brendan. That's pretty seasonal, and I think that will pick up dramatically in May and June.
I want to talk about the difference between renting and buying in America. And we've really seen a divergence there. New home ownership is actually declining. We're seeing credit conditions are showing that a lot of the credit activity is going towards multifamily rental dwelling. When you look at this data, this housing data in the U.S. since the recession, do you see a long-term secular shift away from buying houses and holding them for 30 years?
I don't think so. I think that this is a short-term phenomenon. All surveys show that most people would like to own a home if they can, but there's a lot of economic circumstances that have occurred in the last 10 years that has really put that off for a lot of people.
So, you know, I spoke to the chief economist from Fannie Mae about a month ago, and he said that they're building a new headquarters, and the rooftop observation deck, they're referring to it as their millennial observation deck because they're so desperate to figure out what millennials are doing. You really don't see any difference generationally in the appeal of buying and holding on to a home.
No, the appeal's there. Last year, we did 32% of our sales to millennials. That's down from a 40% figure in a normal market. But they've got a lot of school debt. A lot of them didn't get the jobs they anticipated on getting when they got out of college. And they just haven't got the financial wherewithal to buy yet.
School debt, it's very interesting to hear you note that, because that's something that the New York Fed has been focusing on when they look at millennials, right? One of the discrepancies that we're seeing is that the school debt is just higher than it used to. I want to talk a little bit about rates right now for you know, we're at 3.91%, I think is the median right now for new mortgages, or I'm sorry, it's the lowest for new mortgages. You know, given all the Fed prognosticating that we do here, what do you see out in the field? What is the sense? Do you sense that people are jumping now to get a lower rate, or are we confident, is the market confident that those lower rates are going to extend for a while into the future yet?
Well, I think everybody's confident that the low rates are going to continue. When the Fed changed their rates here a little while ago, it had no impact at all. It doesn't look like that's going to change for the foreseeable future. The problem is we don't have adequate inventory for people to be able to purchase the property they want.
I appreciate hearing that, because I have to disclose right now that the Greeleys are attempting to refinance, so I really appreciate that. I want to talk a little bit about central bank policy more broadly. You know, in olden times, when economic models worked the way they were supposed to, when rates were low, we would see housing bubbles. Can you talk a little bit about this divergence in central bank policy between the U.S. and the EU and China, excuse me, and Japan, and, you know, whether or not we're actually seeing the housing markets respond?
I don't think that the housing market is responding adequately yet. If you watch the stock market for the last 3 or 4 weeks, it's just people are very frightened. They don't understand 300-point swings day in, day out in the stock market. So it makes them hesitant to invest in real estate or anyplace else.
You know, I want to talk a little bit also about real estate in the United States. It's hard to figure out what's going on in China, but one indicator is whether or not the yuan is leaving China and coming into housing in the United States. Is that a trend that you're looking at all? Is this just anecdotal, or is there something there worth talking about?
It was quite a flight to invest money out of China throughout the rest of the world, especially North America. That has dropped off dramatically in the last 60 days. The Chinese government was actually encouraging it for a while, but by encouraging it, they were trying to take the bubble out of their own real estate business. However, they're quite concerned about using up all their cash, and we've seen the markets drop off pretty dramatically for foreign purchasers.
One of the things that we saw in the run-up to the recession was that money that went into housing really distorted the economy in a sense that a lot of money, a lot of extra labor went into construction. We're now enough years out of that crash that we have a sense of what the economy is going to look like in the future. What's the proper role of new home purchases and new home construction in the U.S. economy?
Well, unfortunately, the construction isn't big enough. It's only about 500,000 units a year. Builders know that they have a good profit, and they can make that profit figure whether it's a $200,000 house or a $1 million house. And so in the last few years, they've done a lot of construction of multifamily housing. They lost a lot of their labor force. They lost a lot of the land they had, and gearing back up and getting new apprentices that will come back in the labor force is one of the things that's holding them up right now. Long term, we should be probably 1 million new homes a year for the next 10 years. The demand is there, just don't have the capacity to do it.